Today, at the beginning of the European session, traders became disappointed by the European macroeconomic data. In our video review, we will learn how such data may affect the market sentiment. The final data on the Eurozone manufacturing PMI unveiled to drop to 61.4 points from 62.8. The preliminary estimates showed a decline to 61.5 points. In the United Kingdom, economists had expected a decrease to 60.1 points from 60.4. In fact, the indicator slid just to 60.3 points, surprising market participants. However, the mentioned reports failed to affect the market sentiment as traders were waiting for the Eurozone unemployment rate data. Analysts had foreseen a drop to 7.6% from 7.7%. Although the unemployment rate remains very high and it still exceeds the same indicator in the US, even a small decline is a really positive factor. In fact, the final figures met the forecast, but traders showed no reaction. Publication of the US employment report is the main event of the day. The data will be disclosed before the US Labor Department report that is slated for release on Friday. What's more, the US Fed has made it clear that it may begin closing the QE program if the labor market condition continues to improve. It means that the quantity of the US dollars will decline, thus leading to the currency's appreciation. At the same time, the number of employed people is likely to advance by at least 500,000. If the forecast comes true, the US dollar may rise. Let us take a look at the trading charts ahead of the publication of the US statistics. As we expected, the upward movement looked yesterday in the first part of the day was just short-lived. At the beginning of the US trade, the euro-dollar pair resumed falling and returned to the level of 1.18. This once again proves that the euro is overbought and the downtrend, which began in June, still prevails. A stop near the level of 1.18 led to stagnation between the levels of 1.1790 and 1.1820. In this case, the trading strategy is based on a break of the limit of the range. Buy positions could be opened if the price consolidates above 1.1820, and sell orders could be initiated below 1.1780. At the same time, the pound-dollar pair dropped from the resistance level of 1.38 to 1.3735. Despite a rise in interest in the short positions, a correctional movement locked on August 20 is still in force. The support level at 1.3750 slackened the fall from the resistance level of 1.38. If the price fixes below 1.3725, it's likely to go on sliding. Thus, the pound sterling may hit the level of 1.3690. If the pair fails to fix below 1.3725, it may return to the resistance level. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.